Hi everyone, today we'll be going over accounts October-November 2020, paper 3-1, question number 4. This is structured paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours, so we will be attempting to solve each question under 30 minutes. And this question number 4 is a part of section A, which deals with financial accounting. So without any further delay, let's get started. TCPLC provided the following information at its year end. We're given the ordinary shares in issue, which is 1 million, at 0.50 each. So this is the number of shares. Nominal rate is 0.50. Then we're given the annual dividend provided to shareholders. It amounted to 80,000. We are given profit from operations, which amounted to 215,000, and we're given the profit for the year, which amounted to 195,000. Then we're also given the market value of one share, which is 0.75. So we can see that our nominal rate is 0.50. But if we were to buy those shares at today's date, then we would have to pay 0.75 for each share. Okay, let's have a look at our first question. We need to explain why the use of ratios may be helpful in analyzing accounting data. All right, let's write it down. So the first thing that we need to realize is whenever we're looking over financial statements, if we are only looking at one particular value, then it doesn't really give us an idea of that value's efficiency or the company's efficiency, right? So suppose we're talking about profit. So if we're only looking at the profit, maybe it is 100,000, right? But if we do not compare it to any other term, then we will not really ascertain the true performance of the company. So if we're talking about profit, then it is better if we compare it with net sales and figure out our net profit ratio, or we could even compare it with the number of ordinary shares in order to figure out the earnings per share. So what I'm trying to say is that absolute values may not be useful in isolation. Let's write it down. Absolute values may not be useful in isolation. And since isolated values does not really give us any idea, the use of ratios put values into context. Let's write it down as well. The use of ratios put values into context. And ratios definitely allows us to compare the ratios of our company with other companies or with the industry averages, which helps us to get a general idea of where the company stands within that particular industry. Let's write it down. Ratios enable comparisons with other companies or with industry averages. And finally, ratios help in decision making. Let's write it down as well. Ratios may help in decision making. Okay, this concludes the first part of this question. Now we can move towards the second one. For the second part of this question, we need to calculate TCPLC's income gearing ratio to 2 decimal places. And we know that the formula for income gearing ratio is just the finance charges divided by the profit from operations. And we represent our income gearing ratio as a percentage, so we just need to multiply it with 100%. Now let's have a look above to figure out our finance charges as well as the profit from operations. So we are given our profit from operations right here, which amounted to 215,000, but we're not given any finance charges. But we can also see that we're given profit for the year, which means that we can easily figure out our finance charges since we know that profit for the year is just the difference between profit from operations and the finance charges. Okay, let's substitute the values. So we know that the profit for the year amounted to 195,000. And we're given our profit from operations to be 215,000. and we just need to figure out our finance charges. So this gives our finance charges to be 215,000 minus 195,000, which results in the value of 20,000. Okay, so this is the value for finance charges, and we have our profit from operations to be 215,000. So let's substitute these two values into our formula. Okay, so we have the finance charges of 20,000 and profit from operations of 215,000. So TCPLC's income gearing ratio is going to be 20,000 divided by 215,000 times 100%, which results in the value of 9.30. Now for the second part of this question, we need to state what this ratio tells an investor about the risk of the company. So we can see that we're just dividing our finance charges with our profit from operations, right? So this just means that what portion of profit from operations are we giving out as our finance charges? And we can see that 9.30% of profit from operations is being paid out as finance charges. So it definitely shows that the company has a good ability to pay the interest out of profits, because even after providing the interest of 9.30%, we still have more than 90% left as our profit. Let's write it down. It shows that the company has a good ability to pay the interest out of profits. This concludes the second part. Now for the third part, we need to name one other ratio which assesses the relationship between fixed cost capital and total capital. So fixed cost capital just means our non-current liabilities, and total capital just means our capital employed. And the ratio which includes these two factors, non-current liabilities and capital employed, is our gearing ratio, right? Since the formula for gearing ratio is just non-current liabilities divided by our capital employed times 100%. So this definitely shows or assesses the relationship between fixed cost capital, which is non-current liabilities, and the total capital, which is the capital employed. Okay, so this concludes the second part of this question. Now we can move towards the third one. For the first question, we need to calculate TCPLC's dividend cover to 2 decimal places. And the formula for dividend cover is just the profit for the year divided by the annual dividend. Okay, let's have a look above for these values. We can see that our profit for the year is 195,000, whereas our annual dividend is 80,000. So let's just substitute these two values. Profit for the year is 195,000 and annual dividend is 80,000. And this gives our TCPLC's dividend cover to be 195,000 divided by 80,000, which results in 2.44. And since this is the dividend cover, this basically means how many times will the profit for the year be able to cover our annual dividend? And we got our answer to be 2.44. So this just means that our profit for the year will be able to cover the annual dividend 2.44 times. So we also have to include the unit, which is the times. Okay. Now for the second part, we need to state what this ratio tells an investor about the company's potential for capital growth. So like I said before, this ratio tells us that our profit for the year is able to cover the annual dividend of 2.44 times, right? It means that even after covering the annual dividend, the profit for the year will have ample remaining amounts, which is then invested back into our profit. So it definitely increases the profit generating ability of our business. Let's write it down. The company is plowing back the majority of its profits into the business which should increase its profit generating abilities. Alright, this concludes the third part of this question. Now we can move towards the fourth one. For the first part, we need to calculate TCPLC's dividend yield. Okay, and dividend yield is just our dividend per share divided by the market value per share. And since we saw our dividend yield as a percentage, we just need to multiply it with 100%. So let's have a look above in order to figure out our dividend per share and market value per share. So we know that the number of ordinary shares in issue is 1 million, right? So in order to figure out the dividend per share, we just need to divide the annual dividend with our number of shares. So let's figure out the dividend per share. That's annual dividend, which is 80,000, divided by the number of shares, which is 1 million. And this gives our dividend per share to be 80,000 divided by 1 million, which results in the value of 0.08. Okay, and we are also given the market value per share, which is 0.75. So let's substitute these two values into our formula. We have dividend per share of 0.08 and market value per share of 0.75 times 100%. So this gives TCPLC's dividend yield to be 0.08 divided by 0.75 times 100, which results in the value of 10.67%. Okay, and for the second part, we need to state what this ratio tells an investor in the company who needs income. Like I said before, the market value per share just means the value for one share which we will have to pay in order to buy the shares at today's date. And dividend is just the return that we get for our investment in shares, right? And we can see that the return on investing in the shares at today's date will be 10.67%, right? So this just means that an investor will get back more than 10% of the amount he would pay now to buy shares each year. Let's write it down. An investor will get back more than 10% of the amount he would pay now to buy shares each year. This concludes the fourth part of this question. Now we can move towards the fifth one. We need to name and calculate the ratio which shows the amount of profit attributable to each ordinary share. So the ratio that shows the amount of profit attributable to each ordinary share would be earnings per share. And we need to calculate this ratio as well. So earnings per share is just going to be the profit for the year divided by our number of ordinary shares. And this just shows the amount of profit that is being received by each share. Okay, let's have a look above for our profit for the year and number of ordinary share. We can see that our profit for the year is 195,000, whereas our number of shares is 1 million. So let's substitute these two values into our formula. So profit for the year is 195,000. And the number of ordinary shares is 1 million. And this is an amount and this is just a number. So this gives our earnings per share to be 195,000 divided by 1 million, which results in the value of 0.195. So this just means that the profit attributable to each ordinary share is going to be 0.195. This concludes the fifth part of this question. Now we can move towards the sixth one. We need to name and calculate to 2 decimal places the ratio which measures the confidence investors have in the future of the business. And the ratio which measures the confidence investors have in the future of the business is just going to be price earnings ratio. And we have to calculate it as well. So the formula for price earnings ratio is just going to be the market value per share divided with our earnings per share. Okay, let's have a look above to figure out the values. So we have our market value of one share to be 0.75, and we figured out our earnings per share in part 5 of this question, which was 0.195. So let's substitute these two values. That's 0.75 market value and 0.195 earnings per share. So this gives our price earnings ratio to be 0.75 divided by 0.195, which results in the value of 3.85. And this concludes the sixth part of this question. Now we can move towards the seventh one. We are given additional information. Fred is considering investing in TPLC. His brother says that in order to make a decision, Fred does not need to look at the income statement and statement of financial position, but only needs to look at the director's report. So now we need to advise Fred whether or not he should follow his brother's advice. Okay, what we know is that the director's report does give a review of the performance and the details regarding dividends. Let's write it down. The director's report does give a review of performance and details of dividends, but Fred would require more information than this, right? Let's write it down as well. But Fred would likely want more detail than this, because one does not invest in any company just on the basis of director's report that only gives the review of the performance and dividend details, right? And what we know is that the income statement and the statement of financial position deal with historic data, which means that this just records the transactions that has already taken place, and this might not be a good indicator of future performance. Let's write it down as well. The financial statements deal with historic data and may not be a good indicator of future developments. But we also know that the director's report also covers likely future developments of the company. Let's write it down as well. The director's report also covers likely future developments of the company. So based on these factors, now we have to advise Fred whether or not he should follow his brother's advice to only look at the director's report. So I would personally suggest him to look at the financial statements himself and figure out whether the director's report holds true or not. And also that way he will be able to measure the ratios of TCPLC with other industry companies or competitors, right? And figure out where TCPLC stands in that particular industry. So let's write down our decision clearly. The decision would be that Fred should not follow his brother's advice. So this concludes the 7th part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.